Everything has changed so much in the last 2 years. You might have all these career plans and you plan like your next 5 years on how you're gonna get to venture. Those plans, like, throw it in the trash bin because everything has changed now.
What does this mean for the future of jobs?
I don't think people will need to change their professions, but they will need to think about ways to supercharge themselves with AI tooling. Today, more than 80% of people who come to Dubai to purchase a property do it fully through the chatbot. They never speak to a real estate agent. After Dubai deploys their AI platform, the EBITDA margins typically go from 12 to 40%.
Who ultimately profits from this?
In 2023, we had a partner meeting and we were having a discussion around what is going to be the biggest impact of AI. And it was pretty clear to us that the biggest impact of it was going to be in.
So Zeynep, you're a partner at General Catalyst, which is one of the biggest and most successful funds in the world. And if a young person is listening to this that has a very high level of ambition and is thinking that this is exactly what I want to do, I was wondering, what would you say to her? What is the main driver for success, and success here defined as getting into such a position?
I think I knew quite early on in my career, even before my career, kind of in university, I've decided that I wanted to go into venture. I wanted to work with founders. A lot of that was also driven by personal reasons. My parents were both entrepreneurs. Growing up with them, I kind of saw how the job of an entrepreneur can be extremely lonely. So I had this aspiration to work with founders, with entrepreneurs, and be a partner to them. But I still didn't go into venture straight out of university. And at the time, I didn't do that because before becoming a partner to these founders, I wanted to rightly equip myself. So for me, it was all about how can I go into an organization and learn the most, and how can I get technical skills? Because I knew that that was something that is something that is harder to acquire later in your career. So I was super hungry for that. And therefore, straight out of university, I ended up going into investment banking, which is like super intense, but I think it was so worth doing that because of both the technical skills that I learned. I think I learned what like good looks like. And then I was in technology investment banking. So I ended up building relationships with a lot of, software companies in the Valley, as well as, media companies in the US. And then after that, ended up joining a private equity fund called TA Associates, which is like a venture and private equity investment. They initially started in venture and then moved into private equity. So I didn't go into venture immediately. I was looking for opportunities so that I can skill myself as much as possible so that I can be a good advisor to founders.
And what do you think, which skill or what kind of mindset helped you to go through all those different stages, like from investment banking to PE and then ultimately to venture as well?
I think I knew the end goal. So I knew I wanted to go into venture, but I wasn't super deliberate in all the steps. It was more about a feeling at that point in time. So after investment banking, again, I had the opportunity to go into venture, right? And I was interviewing with both venture funds as well as private equity funds. And throughout the interview process, I realized that I could actually learn so much more going into private equity because it's later stage companies. So I will see what grown-up businesses look like. And it is more technical, so I will continue developing my technical skills. So I made that decision at that point in time. And even after private equity, again, I had this idea of, okay, now I'm going to venture.
Yes.
But then I said, okay, you know what? It's not, I don't have all it takes. I need to go into operating. And I made that decision. It was like almost a split second decision of having a venture firm offer and saying, this doesn't feel right. So it was more of an intuitive decision almost, because in the journey of an investor, and this includes like in venture, you have identifying an investment, then you do the investment, then you are a board member, so you work with that company, and then there's the exit. And I had the experience in finding the investment, doing the investment. I had these from private equity. I had done exits in banking, I had done IPOs, but the board work was something that I really wanted to be good at. And I didn't think I could do that unless I had been in a company and worked with a CEO side by side for some time. So that was the decision in the end. I ended up joining Rollup, now called Zeps, which is a fast-growing payments company in the UK, working directly with the CEO. The goal for that was, one, I wanted my brain to work a little bit differently. I had done investing for, at that point, 5-6 years. And two, I didn't think I could understand ever the mindset of a founder without ever being an operator myself and building things myself.
And what is the underlying motivation of why you wanted to go into investing into the first place?
Twofold. One is what we talked about in terms of like working with founders. I think that was the most important thing to me. And the second thing is that this is a kind of job where if curiosity is one of your like biggest values and drivers, it's like drinking from a fire hose. You are constantly learning about different things. You will never go very deep into one thing. And I think that's what I learned from operating. In the world of operating, you do specialize and you go very deep. If you're in product, even within a product, you could go into a specific feature, and it's very micro focused, which is a skill. I think what we have in venture is that we stay a little bit more on the surface, but we need to be really fast on our feet on how we learn about different things. If you have this curiosity, I think you would be a perfect fit for the world of venture.
And you mentioned like the continuous learning process. Do you have a process around that, or anything how you approach it when a company comes around where you're probably not too familiar with the space? How do you go about that?
I would say it's twofold. One, like I read a lot, so I read so many, Substack and Medium articles. And then the second thing I've done this over the years, is that they're not really an advisory board, but they are my friends. So I have a group of colleagues slash friends that have superpowers. When I go into a business in financial services, I know exactly who to call. And this person doesn't need to be in GC, right? These are people who are my contacts in operating. It could be in investing, where I know they are the expert in that field and I can just talk to them about the market. I would say so much of my learning I actually do with my advisory board slash friends, because that really does make things come to life a lot more than just reading.
And if we go back again, and because I always think that we are strongly shaped by the context and the environment that we grow up in. So I was wondering, like, what were early conceptions that you grew up with and that are still affecting you today?
So I would say, like, I think entrepreneurship almost like runs in someone's blood. And I think I had that with my parents. And now kind of my whole family, my brother also is in the family business. So I was kind of the odd one out who decided not to start something, although I do think of myself as an entrepreneur in the context of GC, and I think of everyone who works at GC as an entrepreneur. I think being interested in new ideas, having this drive and urgency, being more action oriented, it was one of the values in the family. Everyone was a kind of a doer. The second thing is that I think this is maybe a culturally something in Turkey, is that people can be quite persistent. And I think that's something I grew up with, like, again, culturally. Yeah. Never taking no for an answer. I think that was something important. One of the most important traits of an entrepreneur, I think, is the persistence, having that laser focused vision and never taking no for an answer. And I definitely observed my parents doing that.
When I grew up, I was really competitive into sports, and then having siblings like really added to this because you always wanted to be better than the other. And then the other thing for me was also that I grew up with the idea that you can literally achieve anything that you set your mind to. And is this also where your own ambition came from this idea of like, okay, you can just take action and get somewhere?
Exactly. And I think there was this thing about, which I'm very grateful of, that it's okay to fail. The most important thing was, I think as a kid, I remember this very vividly, there's nothing you can lose from asking. So just ask. And if people say no, it's fine. I think that I really internalized, which helped me then both build this network of people, because then I would just speak to so many people without being shy and trying to learn from them, but also take risk. And if I failed, it was fine, which again is, I think, part of the entrepreneur mindset.
So General Catalyst has today 43 billion assets under management. So could you talk a bit about how GC is set up and operates? Because for a venture fund, that's massive scale.
So at GC, we have multiple fund strategies, and beyond our fund strategies, we also have number of companies that are affiliated with GC. But the first thing is that GC at its core is very early stage. So early stage is our core. We're in the people business. The number one goal for all of us who works at GC, whether you're in investing or in the Policy Institute or as part of Percepta, to meet exceptional people and bring them to our network. If you think about all the different funds that GC has, we have the seed and the growth fund. So that's the venture fund. Then we have creation, where we help build companies with founders. And that can be in the form of a hatch. So where we start a company together with a founder ground up. Or we could be doing AI rollups, which is AI transformation and AI rollups in services industries. We have CVF, which is a non-dilutive growth financing vehicle. particularly to fund companies' marketing and sales spend. And then we also have GC Wealth, GC Policy Institute, and many other businesses that are in the service of our founders. Core is very much seed and creation. You can think of all the other fund strategies almost as a service to also our early stage founders. The growth fund allows us to invest in a company at seed and then be with them throughout the whole journey to IPO, even post IPO. In Europe, particularly, there are not that many funds that can do that. There are several examples of us doing the early stage and then continuing with growth. So, Stripe, for example, we did the seed investment and then we led their B round and then invested in every round after that. I think that's like total 14 rounds we backed Stripe and maybe more. If you look at my portfolio, we have Finom, which is an SME neobank. We did the seed, we led the B, and then we continued investing in the company. And then CVF has done a major investment also in Finom. So you can see all these different fund strategies coming together to support our portfolio companies.
With such a large fund, how do you generate high returns for the investors? Because, I mean, generally speaking, it's usually easier to create high multiples with smaller fund sizes.
The strategy of growing our AUM is really through different fund strategies. If you look into private equity, you can technically grow your fund size and your returns will not be so much impacted because of the way you drive returns. But in venture, because we're in the power law business, the fund size does matter in terms of driving returns. That being said, GC was founded by entrepreneurs. Everyone in GC is an entrepreneur. All these fund strategies that I'm talking about when it comes to AI rollups or CVF were started by people who are investors or not even senior investors, like principals or more junior investors at GC. Like for us, it's not just, you don't only create value through doing seed investing or growth investing. You can also create value through building companies. You can build value through doing roll-ups. You can do that through debt financing. So I really like that we at GC, we think about it holistically because every founder also needs to think about it holistically.
Scaling and kind of increasing the product of a venture fund, is this also a way to differentiate? Because I think it was Jeff Bezos who said differentiation is survival, and it always comes to my mind because when he got asked a lot why he doesn't have any retail stores back in the day, and he said he just didn't know how to innovate. Yeah, exactly. Until he came up with
Yeah.
Amazon with the just walk out payment
Yeah.
method, and then he went like big on this as well. So I'm curious about how the relation to venture and that.
Yeah. That's probably right, especially at this point in time, because venture as an industry is definitely maturing. But we have more venture funds, we have more competition, which is all in the benefit of founders, by the way. But that also means that, and there is, because there's like a limited amount of capital that can go into venture, that competition is driving a lot of the funds to innovate. Maybe not survival, but if you want to continue being the best, you need to think creatively about how you drive value. And I think that is when GC is looking to hire people, that's probably like one of the most important values that we look for. One of them is expanding possibilities. So are people thinking creatively? Are they going to be doers? Are they going to be not just execution people, but also entrepreneurs who have ideas?
I think it was Doug Leone who said that venture capital is going from a high margin boutique business to a low margin mainstream industry.
I don't think we're mainstream. Like, I don't think we're yet at mainstream. And if you look at how we run in GC, like, you would be surprised that we are a big fund, but in the way things are run, it's still very much startup here. We do have a CRM, but we established it like relatively recently, for example, whereas when I was at TA, we lived by the CRM. CRM was like the most important thing and the data was stored for like 25 years. It's it, we're still a relatively small investing team. The reason we look big is because we have different fund strategies and different companies that are in the service of the founders.
And you made some very interesting early stage investments as well in Europe in the last couple of years. So, and you're one of the few funds that you said can double down also in the later stages. So, what are the reasons for founders to choose GC in this competitive context, especially in Europe?
I'd say it's twofold or threefold even. One, I think the founders do like if a fund can continue with them to the IPO journey or even after. They also want to work with partners who have seen different scales. Because as a partner, if you have worked with seed companies as well as pre-IPO companies, the then you bring the right experience to the board also to support them throughout that journey. So it's not this graduation where you invest and by the time it's Series C, someone needs to, do the secondary and clean you up from the cap table and you need to leave the board. But you will have this one trusted partner that will be with you from the start till there's no end. It could go forever, basically. That's one. I think the second one is what I just said about all the fund strategies that we have. Like Finon was a perfect example where we invested from the seed fund, then invested from the growth fund, then now CVF is supporting them. So there are just so many ways that we can help them even think about driving value. And then the last one is particularly in the context of I think US is very important. We are here very much invested in European resilience and building European technology companies and making sure that the talent is either returning from US to Europe or stays in Europe. But also, if you think about the talent density of AI, so much of it is in the US. So the global investing team and how we have exchange with each other and how we can help our European companies also go to the US is like a big value driver.
For me to summarize, just so that I got it correctly, like you have the creation fund, and then this is the umbrella for two practices, which is the more traditional incubation and then the AI roll-up, right? So could you talk about those two practices and how they're different to each other?
Creation Fund was, one of the cornerstone funds from the start of GC. Kayak was, I think, the first company that came out of it. For example, the founders of GC founded a company in the travel space, so they were entrepreneurs. And then with GC, they had this idea of let's go find exceptional people and back them to the businesses. But what if we meet exceptional people and like they don't have the business idea? Why don't we actually work with them to build these businesses? That was the idea behind the Creation Fund. Typically, the companies that come out of Creation Fund would be ideas that take a while to get to commercial traction. So what I mean by that is these are big ideas, and we know that after the seed investments, it's going to take them a while to get to the traction to be able to raise the A. So typically, the way we would do these investments is that we would do the seed and also backstop the A. So we tell the founders, you've done your seed round, and then A is going to be a very difficult round for you to raise. We don't want you to optimize for the wrong things. We don't want you to optimize to try to get to 1 million ARR, which is not really going to be in the interest of the long-term success of this company. Maybe you want to really focus more on the product build in the first like 12 to 18 months. So if you want to go raise your A from outside, you can go do that, but you have the backstop of GC. And typically at the end of these two investments, our ownership would be a typical kind of seed and a Series A lead. Because a lot of these incubations, as you know, would be getting a very high ownership in these businesses. We don't do that. It's still very much a founder's business. But what we do is that we're going to be a partner to you already. We're committing for multiple rounds. This could be in healthcare, for example, where go-to-market is challenging. Financial services is another one. Circle, for example, was a company that was built in the GC offices, funded out of Creation. Again, like huge idea, right? Stablecoin that you need to work with the regulators to get it started.
Sorry, and this is with the founders from your network that you engage with that probably did not have an idea or the specific idea on how to start a company, but you say they're exceptional individuals and you approach them with an idea and then they go for the journey.
It can happen in two ways. One is exactly as you described. Exceptional people, founders, operators that we know that we want to empower them to go start a business that we had been ideating about, for example. Or it could be that they come to us with an idea and we say, love the idea, but like if you raise a seed round now, you're not going to be able to raise the A. So for example, it could be an idea where you want to build something in supply chain and you need to connect with a lot of enterprises and manufacturers. If you were to do a seed investment there, by the time you connect with all the manufacturers and kind of set up the company, you're probably going to run out of that seed funding. You're not going to have commercial traction and the Series A is going to be difficult to raise. If we have very high conviction in the team, as well as the idea when we meet them, we might say, why don't we do this out of Creation? We will backstop your A, we will do a bigger investment effectively, and we will be a partner to you effectively. We're committing long term. One example that I would give is one of the companies that I'm on the board of called Moment. This is a Pan-African payment network that we're effectively helping build out of our Creation Fund. The reason we did this out of our Creation Fund was because to build a Pan-African payment network, you need to get a lot of licenses. You also, to get payment volume, so it's very hard. They have a cold start problem. To get those payment volumes, it's really difficult. So what we did is that we met this team. We had the idea already. We said, okay, why don't we work together, but why don't we do this as a three-way partnership? So we brought on board Rapid, which is one of our portfolio companies who has helped with technology and licensing. Then we brought over MultiChoice, which is one of the biggest pay TV providers in Africa, and said MultiChoice is going to be your first customer. So you're going to get the payment volume through them. So in a year's time, between GC, MultiChoice, and Rapid Funding, the company got started and got to very strong commercial traction, which wouldn't have been possible if we didn't do this out of creation fund and we just did a typical seed investment.
That's a very unique value proposition, isn't it?
Yeah, exactly.
And so this is for the creation, and then one part of it is also the AI rollup, right? So, and the AI rollup is mostly you're mostly focusing on service businesses for this.
Yeah.
So, could you talk a bit about this and why services industries historically have not been very attractive for venture, but how this has changed now?
When AI happened, in 2023, we had a partner meeting and we were having a discussion around what is going to be the biggest impact of AI in traditional industries. And it was pretty clear to us that the biggest impact of it was going to be in services businesses that are dominated by text-based and voice-based workflows. So that will be call centers, it would be insurance brokerage and claims management. It's going to be legal, it's going to be accounting, it's going to be property management and real estate, where a lot of the workflows are just text-based and voice-based. And a lot of these industries, as you pointed out, they don't really have any technology. So they haven't had any innovation, which is precisely why venture investors haven't been so interested in them. So we kind of said, okay, this is the opportunity. There's a lot of AI software businesses out there, so AI application providers that are trying to sell to these services businesses. And I think that's a very strong trend, and we're seeing that in customer service. We're seeing that in legal. They're having very strong growth, but also we can kind of think about this in a deeper way in the context of AI transformation. Why don't we actually go become these services businesses? So rather than trying to sell applications to these services businesses, why don't we become that service business and become effectively start building the next generation of AI driven services businesses? So that was the idea of AI rollups. After we identified all the industries that we estimated that there would be at least 40 to 50% automation of through AI in the workflows, and we studied these markets and realized how fragmented they were. So then at that point, we said, well, actually, instead of building these from scratch, why don't we acquire one and then transform it? And then actually, because we see how fragmented this market is, we can also drive value through consolidation. With people like me and a few other people who have also a background in private equity, have done roll-ups, have seen how we can drive value through consolidation. We said, well, that's kind of the cherry on the top, right? We can do the AI transformation, but we can also drive value through consolidation. But AI transformation comes first. So I think that is the most important distinction, because the way we drive value in our AI rollups is more than the kind of 60% or 70% of it is through AI transformation. The rollup is driving value, but it's not driving value in the way you would do in PE, which is effectively levering up businesses and using that to do a consolidation and pay back that debt, which creates equity value. We don't use any debt in our investments. We do this particularly for the first 2 years, pure equity. And it's very much risk on and it's very much spend in, whereas private equity would be spend out, because we put the spend in because we want to drive the AI transformation, do the technology investment. So it's a very different approach to private equity, but there is some, I'd say, takeaways in terms of execution of the roll-ups from PE.
So it's based on the hypothesis that the low margin businesses can work with, or AI can help automating tasks, which then leads to higher margins, right? And do you have any examples for this?
But you're precisely right, by the way. I think quite a lot about this, where what will the P&L of these businesses look like long term? And this is why the services businesses are actually so interesting. The reason we've always been interested in software is because software is recurring revenue and a high margin. Then you look at services businesses today. Services businesses can also be very recurring revenue. So one example would be one of our portfolio companies, Dwelling. They're doing a roll-up in the real estate agency business in the UK. If you think about the revenue stream of a real estate agent, it's rental contracts. Those are recurring contracts that are usually 3 to 5 years. So in terms of a revenue model, it's actually very similar to software. And now through AI transformation, the margins are also going up. So in the case of Dwelling, for example, after develop deploys their AI platform to the agencies that they acquired, the EBITDA margins typically go from 12 to 40%. And the reason for that is because, the agents that we have on finding tenant as well as property management, about 50% of their time free up because so many of the tasks are not automated with AI. So then you look at that P&L of this business. If you were to be given that P&L of the real estate agency that's operated by Duvalier and it didn't have a name, you would assume it's a software business. Like you wouldn't know effectively. If you think about then the value creation that we have, right? So much of it is actually driven a lot more through the AI transformation rather than the consolidation because the margins of these companies are going up significantly. And that also drives multiple expansion.
And last year, MIT conducted a study about the implementation of AI in the businesses. And I mean, it was a big publication. Like the outcome was that 95% of companies do not see any impact, positive impact on revenue growth through AI implementation. Like, how does this relate to the high growth of the margins that you just described?
Very good question. So, revenue growth is driven by the market structure. So, let's take accounting. We have also a portfolio company called Integral that's doing AI transformation and accounting in Germany, and they're doing a roll up. As part of their work, if you look at the accounting market, SME accounting market in Germany, there is a lot of demand, but there's not enough supply. So, a lot of the accountants are effectively underwater and they are not taking on more clients because they're at capacity. In the case of Integral, as they use AI to create idle time, so automate tasks for these accountants can go and get more work, right? Because they will have more free time. And the reason that they will get more work is not because there's a lot of demand, but because thanks to AI, they're delivering a better service. And that creates a flywheel that drives organic growth and increasing demand to this accountant who is now driven, AI superpowered effectively. So in the case of accounting, we know that if we free up the time of an accountant, that will drive revenue growth because these accountants will take on more work. If you look at in the case of real estate in the UK, that's not the case because the beauty of the business, as we described, is the 3 to 5 year contracts. But that also means if you want to drive organic growth, it's very hard to churn these contracts because they're super sticky. So it doesn't necessarily mean that if you free up the time of a real estate agent, that real estate agent is going to be able to go get more work. AI automation might not drive revenue growth in the same extent it would be doing in accounting.
The way the businesses become more profitable is by automating repetitive tasks.
Yeah.
And if we zoom out a bit, I'm curious, like, what does this mean for the future of jobs? Like, what skills are going to be more in demand, and how do we see this shifting?
This is definitely one of the top topics for us. Like, this is something that's very top of mind to us as part of our AI transformation, thinking about how to address the issue of reskilling and upskilling. We are doing this AI transformation because we believe that there will need to be human in the loop. We know that it's a lot of these jobs cannot be handled purely with AI. That's also driven by the fact that a lot of them are regulated. If you think about insurance brokerage, if you think about accounting, these are regulated businesses. So there needs to be a human decision factor in these. It's something that we do with our portfolio companies. When we go and acquire a business, we run a training with all the staff on how to use AI tools to effectively superpower. So much of the transformation happens through not building the technology. It's actually through teaching the people on how to superpower themselves through technology. So we're actively doing that. I don't think people will need to change their professions, but they will need to think about ways to supercharge themselves with AI tooling to deliver better service because that's where the market is going. And to continue to be the best service, best accountant, or the best real estate agent, you're going to need to embed these tools into your offering.
And I understand that this is financially attractive. I'm wondering who ultimately profits from this.
The customer. The customer ultimately profits.
So is the hypothesis not only that the services are going to be done quicker, but also that they increase in quality?
Absolutely. That is like the cornerstone thesis, actually. This is so important because that's effectively also what's going to drive organic revenue growth long term. Only if you deliver a better service, you're going to start getting organic customer demand. And we know that with AI, you have quicker response times. And I can give you real examples. For example, let's take about real estate agency in the UK. We have probably a lot of listeners from the UK. Today, if you want to go rent an apartment, you go onto Zoopla, You find the listing. You might see the same listing 5 times. Then you have to click on an agent, leave your phone number, and then you wait for a phone call. Let's say that phone call comes, it doesn't come. After the phone call, there's a follow up. Like it takes forever usually to even get a booking, like a booking to view the property. In the case of Diwali today, when you go into Zoopla and you go into one of Diwali's real estate agents, you immediately go into a chatbot. You ask all your questions about the property to the chatbot. You can schedule your viewing. You can do a virtual viewing, then go do a physical viewing. And then if you like the property, you can negotiate with the chatbot. You still don't need to speak to a person. And then you say you agree on a price, you want a contract, you do the KYC through the app, and you can make an offer, and it's done. The speed at which you do that compared to being you have to go to a real estate agency office, give your passport, do the KYC done. It's a much better service. And today, more than 80% of people who come to Dubai to purchase a property do it fully through the chatbot. They never speak to a real estate agent. And that is so powerful. That also shows the personal preference of the user. They don't need to speak to an agent. If they can do it through the chat, they prefer to do it through the chat.
I agree. It's a great example. Zeynep, we have a closing tradition on this podcast. It's one question I ask all guests, and it's if you could challenge the listeners to do one thing this week to get them a step closer to their goal. And this is like whether they're founders, operators, or students. What would you say?
The best decision I think I did in my investing career has been to go into operating. I would advise anyone who's truly interested in going into venture. You might already be in venture. You might be looking into going to venture. Go and look for job postings in AI companies. I think this is an incredible time right now to be an operator and be on the trenches when it comes to what's happening with AI. How are we thinking about applied AI in transforming different industries? And the best way to really learn this is to be doing it. So I think that would be my biggest advice to everyone, to be super open to change. We're at a time where everything has changed so much in the last 2 years. You might have all these career plans and you plan like your next 5 years on how you're gonna get to venture and XYZ. Those plans, like, throw it in the trash bin because everything has changed now. I think we just need to be a lot more alert and open to change and try to get involved with where you see the biggest impact.
Thank you so much, Zeynep. I'm always very impressed by people that are very intentional. And I think that's something that combines you personally, but also like what GC does, like what we just heard about. And what I like about it is that you build out an hypothesis, and usually it requires that you have like a macro view on the world, and then you like execute and test against that. And that I find that very impressive. So thank you so much.
Awesome. Thank you for having me.